Investing jobs are one of the few career paths where it's entirely possible to double your compensation every couple of years. A successful investment fund can grow its profits at an exponential rate while keeping its employee base relatively similar. Even an associate, which is the entry-level position at private equity firms, can already earn $300,000 as a starting salary. And that figure can increase every single year provided that the firm is doing okay and that you're performing well. It's often difficult to get clear salary data in private equity because it's a pretty opaque industry and people don't always like sharing how much they make. But in this video, we're going to do our best to chart exactly how much you can expect to make as an associate all the way up to an MD. So candidly, a lot of this information is going to come from the excellent Heidrick & Struggles salary report, but I've also tried to fact check these different data points with my peers. So what we're going to do is go over the key components to influence your salary in private equity. And really there are three main factors that influence how much you make. The first is seniority, so what level you are in the private equity firm. The second is the size of your fund. Are you a mega fund that makes really big deals, or are you in the lower middle market making smaller deals? And then of course, the performance of the fund. So let's assess each of these factors. So to understand salary progression in private equity, we first need to look at the organizational structure, because every single promotion oftentimes is going to result in a 50 to 100% improvement in your overall salary. Now, the most junior roles are the analyst and the associate. Analyst roles are relatively rare, and they're hired from people directly out of school, so these are people with 0 years of experience. Next, we have the associate, which is the most common entry role for private equity firms. These people will have about 2 years of experience and come from investment banks or consulting firms. And collectively, analysts and associates are really responsible for the nitty-gritty of a deal. Specifically, they'll do things like the financial modeling, as well as putting together diligence packs, maybe managing the data room, a lot of the more junior stuff that happens behind the scenes. Next, we have mid-level roles. And the specific title does depend on what firm you're at, but this will typically encompass the roles of senior associate, VP, and principal. Now, mid-level people are responsible for what is known as execution of the deal. These are handling a lot of the major deliverables as well as the project management aspect of the transaction. This would include tasks like revising a term sheet, outlining an investment memo, perhaps landscaping an industry, or coordinating with lawyers and consultants. And finally, the most senior roles are often referred to as managing director and partner. Now, these people are responsible for sourcing investments, as well as making investment decisions, as well as leading the overall organization. And I will note it's very difficult to get compensation for these individuals because there really just isn't a ton of available data. So now we kind of know what everyone does. Let's try to look at the total compensation for each of these roles. For these numbers, I'm going to be referring to upper middle market as well as mega fund private equity firms. So these are the largest funds. They definitely pay a little bit more than everyone else. So just anchor your expectations according to that. We're going to be talking about the base compensation as well as the bonus you can expect to make. So this doesn't include carry or any profit interests, which we will address later. So as an analyst, I think you can expect to make between $150,000 to $200,000 a year. And it tends to be a slight buffer to whatever the top investment banks are giving their analysts. So because there was a pay bump recently at most investment banks, I think we can expect this to increase a little bit as well. Now, as an associate, which is 2 to 4 years of experience, and I'm referring to a pre-MBA associate, the range is between $250,000 and $350,000. So the next role is the vice president title. And the specific title does depend on your firm. Some firms say this is the senior associate, some it's principal, but this is the role of 5 to 8 years experience. And I think you can expect to make between $400,000 and $700,000. Following this is the principal role, which I'll define as 9 to 12 years of experience. And from the Heidrick & Struggles report, we can see this is a very broad range between $800,000 to $1.5 million. And then for managing director and partner, I think it's just greater than $1.5 million. Again, very difficult to try to estimate this accurately. So these figures pertain to what you can expect to make at a top North American private equity firm. I will note that there is definitely going to be some variation, but I think this covers within one standard deviation of the entire field. It's also worth noting that this compensation is going to be paid out in a combination of base salary and bonus. And the bonus is going to be a one-time lump sum that can be 50% of the total compensation. Now, said differently, as an associate, you might have a base salary of $150,000 and receive a one-time bonus payment of $200,000 at the end of the year. Now, why do firms do this? I think a little bit is just like a very intense culture, but it's also to retain talent and make sure they don't leave until they get their bonus. This is often affectionately referred to as golden handcuffs. So the next most important factor determining your compensation is the private equity fund size. We were just talking about the largest private equity firms in the world. They work with bigger companies, they do bigger deals. So on a pure magnitude basis, you can get a larger amount of dollars. If you think about it, even if your return is much higher, but you're at a significantly smaller fund, you might still have less profits to go around. And that's why oftentimes a lot of the top talent is attracted to the mega fund level. If you're chasing sub $10 million deals, you probably still need a couple of people to do the deal properly. You at least need someone to source the deal and do the diligence. Oftentimes you'll have a third person that helps coordinate a lot of the other factors. And when you contrast this to a mega fund, which is going to be chasing plus $1 billion deals, they're still only going to have 6 to 8 investment professionals on a team. As a result, you can understand how working with bigger companies sometimes has orders of magnitude larger profits. I'm going to use the associate position as an example because there's the most data points, but we can look at how their salary changes depending on what fund you're at. Now, if you look at all the data points here, you can see at a sub $500 million fund that you're making maybe on average $180,000 a year. Now, on the other end of the spectrum, at firms with over $40 billion in assets, they pay their associates on average over $335,000. So you can see that the largest firms will pay almost double what the smallest firms pay. Now, this divergence in compensation is oftentimes why people will opt to stay in investment banking as an associate as opposed to go to a lower middle market firm, because your compensation is going to be higher in investment banking. However, this isn't always true at the higher levels. Most of the time, mega funds will pay more than the top investment banks. Now, one important structural point is that it tends to be easier to climb at a smaller fund. So there is a lot of reasons why you would want to go to a smaller fund. You might get more carry, you might get more economics, and it's totally reasonable to want to go to a smaller fund. Now, the third thing, which is extremely important, is the private equity fund performance. And this is simply just how much money is a private equity firm making, how well are its investments doing. Now, it's very difficult to predict how well firms will do, but if you're at a top quartile fund, you stand to make multiples more than your peers. And in order to understand how much your salary can differ, let's look at this Preqin report. Now, this chart shows how private equity fund performance differs depending on the quartile. Vintage here just means the year that the fund was launched. But you can see here in this column that the first quartile performance is in the mid-20s range, while third quarter performance is around 10%. Now, because of how compound growth works, if we are to apply this return over the course of 10 years, you'll see just how much more that the first quartile fund will grow. If we start with $1 billion in both scenarios, over the course of 10 years, at 25% per year, you're going to grow to about $9.5 billion. Now, contrast that to about 10% return over year, which is much closer to what the S&P generates. This will get you to $2.5 billion at the end of 10 years. Look at this enormous difference in profit. If you're at the first fund, then there's about $8.5 billion in profit generated, as opposed to the second fund, which generates only $1.5 billion. And these wide gaps in performance happen all the time. Top technology funds like Thoma Bravo, Silver Lake, and Vista Equity have been posting amazing returns in the software era and looking at really high quality software businesses. So even though you might be doing something very similar at a comparable firm, you might be making a fraction of what you could at a place like Thoma Bravo. So it should be intuitive at this point, but if you're really just trying to maximize your earnings in private equity, you should really just be looking for the largest fund that is performing at the highest return. Now, if you are going for one of these coveted associate positions, you should definitely check out our website at peakframeworks.com. Our private equity recruiting course is going to teach you how to build financial models, as well as ace the qualitative portion of the interview. So thank you for watching, and I'll see you in the next video.